It sounds like we are live.
It looks like it, it sounds like it, and what a time to be alive, what a time to be live. We'll just make
Good to
sure that,
see you, mate. I'm back in our Auckland office, having just spent a considerable amount of time at the Nix Advisory Zoom virtual Queenstown offices.
Queenstown office, weren't you?
Yeah, that worked quite well. And
Well, it's good to have you back.
Had a bit of interesting yarns with clients, admiring the office view that we have in Queenstown.
Good man. Well, tonight we're going to be talking about separating out your money and
Yep.
managing your cash flow and demonstrating a couple of little tips and tricks within the accounting software that is Xero that we predominantly use. And
we love Xero, don't we?
Oh, we love it. Yep.
Yeah,
Just all
big
day,
shout
every
out to
day.
Xero.
Yeah. So we'll show you some things that might help you manage your cash flow as well. But I guess before we get into that, mate, do you want to tell us about the client that you sit on the board for that has a pretty different cash flow situation, and that they only receive their funding, I think, is it 3 or 4 times a year? So really have to manage that, and then how they do that.
Yeah, so that's a council-funded organisation, and they typically get funding 3 times a year. Back in the day, it used to be once a year. It would just be a big chunk of change. Yeah, so it'd be like winning lotto a little bit. Well, these guys were smart enough to set up a separate account or a couple of separate accounts, and back in the days when interest rates were a little bit more appealing than they are these days, they chuck it on term deposit, and you put one on 3 months, another one on 6 months, another one on 9 months, and it would be tied to your working capital needs. So as it came off, you transfer that cash back to your main operating account, and then that would keep the operating account alive and funded for the next few months until the next one rolls over. So it made sure that you lived within your means, really, particularly when you've only got a tight window of cash to live off of, and a certain amount of time when you're going to receive that cash. So you need to make sure that your planning is really, really quite fine-tuned, because you don't want to find that you get to month 2.5, and then you've got the final 2 or 3 weeks before you receive your next round of funding, and the operating account is bone dry. That'll be pretty tough when you've got PAYE to pay or wages to pay or something like that.
Well, that's probably quite similar to childcare centres and the likes that receive bulk funding, but not too dissimilar to any business realistically that receive all of their funding on one day of the month, and then they need to figure out how to get through the next 30 or 31 days or 28 or whatever. So
yeah, that's right. Let me get that one day of the month for most businesses would be the 20th.
Yeah, it would be, but not for the ones that we encourage to try and break the mold of getting away from the 20th. But that's probably a topic for another night. But I guess the methodology there is to have those separate bank accounts, right? And to almost have it out of sight, out of mind, so that you're not tempted to dive into it and spend it ahead of what it's actually there to be used for.
Yeah, that's it. I like that, the way you put that, out of sight and out of mind. And particularly if it's something that, if you're using Xero, perhaps it's not on your dashboard, so you don't have to show everything on your dashboard. You can customize that. Or if it's in your online bank account access, it's right down the bottom where you don't see it all the time. And look, we did that probably a year or so ago when we had our tax returns and we had a tax bill. We had some money just siphoning away to a separate account to make sure that we could cover our tax, and that was just out of sight and out of mind. And before you know it, there was enough money there to pay the government, and no interest, no penalties. Happy days.
Oh, and then they've got to lent that out for the wage subsidy. Well, not lent it, is it? They've actually given it away. But hey, look, it's all good stuff. Well, what are some accounts potentially that people could look at setting up to start separating out their money?
Yeah, look, the first one that comes to mind, you don't go chucking it into your TAB account.
Or not good.
Oh, nah, not smart. Or your Sky City account. That's not the types of accounts we're talking about here, folks. If you bank with ASB or BNZ or something like that, and you run one account it might be time to actually review how many bank accounts you're rolling, and we would suggest probably adding 2 more, one for tax and another one for if the shit hits the fan.
Beautiful, beautiful. Well, shall we dive into Xero and have a little
Let's.
look at a demo company? I will pull this up here. Something we've prepared a little bit earlier, the demo company from Xero, that anyone can have a play around it and break it and not get in trouble.
The old demo
So you're
company here. Can you see that all right?
Yep, perfect. So I think for anyone looking, so you're going to start with your main business bank account where all of your money would go into.
Yep, that one there. And these guys are sitting on, well, according to Xero, just over $11,000.
So that
somebody's
11
got
grand,
some reconciling to do.
They got some work to do. That 11 grand includes GST and tax in there, right? So the risk is that you start spending your GST and you start spending the money that should be building up to cover your tax.
That's the one. And this business is smart enough to have a savings account, but not that smart that they're actually using it because there's no transactions in it.
So what will we suggest that they do then, Dr. Phil?
So for Dr. Phil, would probably suggest, first thing, cover off your GST. And it's something that we do ourselves. And a story for the punters out there, we've only been going for coming up 3 years. So in the life cycle of a business, not that long, but I tell you, it's heaps of fun. And, hand on heart, I got caught out because I do our GST returns and, we were getting a few refunds in the early days because we had to buy computers and phones and that kind of jazz. And then we had our first GST return where we had a reasonably large amount of GST to pay. And old Phil here wasn't prepared for it. And I had a bit of an oh shit moment because I had to take the cash out of our main operating account. And it wasn't that we didn't have the cash, it just hurt because I wasn't prepared. So there was a lesson there, and I emailed the bank and I said, look, set us up a separate account and it's going to be our tax savings account. And what I do each a couple of times in a month would be jump down into the GST return, and this should come up here. And for your current GST period, now this one's a bit slack. They haven't filed their April-May GST return. Sorry to the government there. But what I would do is throughout April-May, because that's what that period would be for, I'd transfer enough cash to cover the GST to pay. Well, ignore the fact that that's a refund, but that would show the GST that we would have to pay. And periodically through those 2 months, April and May, I would just transfer the cash from the operating account to our tax savings account. Then once you're into June and July, the next thing I would do would be jump down to here. And this is something I don't think that's used terribly often, but there's this preview period so far link. Click that. And based on the data that's currently processed in Xero, this is your draft GST return for the June-July period. So as you'll go, you'll be able to go, oh, gee, I've got GST to pay, or in this case, it's a refund. Again, ignore that. But, if we're in June and that had a couple of $1,000s on there that you had to pay as at the end of June, you're going to want to make sure you've got another couple of $1,000s in that savings account. So by the time you get to the end of July, the amount of the GST to pay doesn't really matter because you've transferred sufficient cash to that tax savings account. And when it comes time to pay it on the 28th of August, it's just from your tax account to your IRD, and it doesn't hurt as much, from my experience at least.
Yeah, very, very wise, mate. I think that you're right. That preview period isn't talked about too often, is it? And that's certainly something that people can keep an eye on so that they can stay on top.
So for the punters, that's accounting, GST return, and preview period so far. If GST return doesn't show on here, it means it's not a favorite report. That's the starred reports. So you just click on reports. Everyone's got that accounting reports feature there, brings you to the screen, and then just click on GST return. If you want it to appear on that menu, click that little star there and boom, you're away. So just to show you, look, same thing, click on your preview period so far and Bob's your uncle.
There we go. Very, very wise. And then what about the tax side of things as well? Because that's obviously GST. Tax gets a bit trickier because we're looking at average tax rates and whatnot, and it can be hard to give general advice around some of the stuff. But let's just have a crack at it anyway.
Yeah, income tax is a difficult one, and if your accountant's smart, they would have given you a heads up on what your provisional tax for the year ahead should be. And if you're paying it 3 times a year on the normal provisional tax dates of August, January, and May, then you should be able to just add up your total provisional tax liability based on what IRD is saying, at least as a starting point, and divide that by 12. And that's roughly what you should be putting in a account aside for provisional tax payments throughout the year. Now, that, as I said, was a starting point. Your actual trading for the year is either going to go up or go down compared to the prior year. So you'd need to do some tax calculations based on that actual trading. Your accountant will be able to help you out there. Normally, you've got a pretty gut feel about how you're going in business, and that's normally evident with how much cash is in your bank or how many debtors you've got outstanding. And if you think that you're actually doing better than expected, then it probably wouldn't hurt just to put a little bit more cash into that tax savings account. But back to your point, Luke, the other thing to do would be to work out just an average tax rate if you are a self-employed contractor, or you're contracting through a company and the profit's going to get allocated to you by way of shareholder salary. You could divide your tax up and work out an average tax rate, and then make sure that out of each invoice or out of your cash balance, you're transferring 18%, 22%, whatever the percentage figure is. And it differs from business to business. So there's no rule of thumb. It would pay to actually look at your numbers and just have a bit of a rough calculation on what your circumstances are, and then what the percentage is out of each invoice that you're going to transfer to that account, so you don't get caught with your pants down.
Beautiful. To put that into a practical example, so let's say someone works out their average interest rate, tax rate, is 20%.
Yeah.
So they invoice out $1,000 plus GST, so they invoice out $1,150.
I like how you keep the math simple. $1,000 plus GST. Yeah,
I'm a simple man. We put the GST straight over, so 150 straight into the secondary account B. We're left with our 1,000. Our average tax is 20%, so we put $200 in. Then we're left with 800 in our business account. Then we've got 350 in our tax account, which will cover our GST, and then we're building a nice buffer for tax at the end of the year. So once we come to our profit, which is obviously our revenue less our expenses, then we're paying tax on that amount, and hopefully by the time of claiming some of those expenses, our 20% that we've been putting aside will have us nice and truly covered for tax.
Bingo, that's it. I love simple maths. That's the way I like it. That's brilliant.
Just a couple of lectures, Next Advisory University is going strong. We'll be graduating all of you viewers out there later on in the year, so stay tuned for that. And there'll probably be an O week at some stage as well. Okay, mate.
Good.
Well, that makes a lot of sense.
And our second additional account, shall we chat about the theory around that?
Let's get into the shit hit the fan, the real special, the doozy. How do we go about working out how much we should have in a bit of a rainy day account or a back pocket account that we're trying not to look at?
Yeah, that's a really good question. And I reckon a lot of people are going to know the answer to that now, having gone through the coronavirus lockdown. And for a lot of business owners, I would say the shit probably did hit the fan, and they had a few, if I could say it, oh fuck moments.
You can say it. Yeah.
Where you looked at your cash balance and you thought, oh golly gee, I don't have anything here for a rainy day. What am I going to do? And I think it really depends mainly on the business owner and their appetite for risk. So some are probably a little bit more risky than others, so we'll want to have a smaller rainy day fund, and others are probably a little bit more conservative and don't want to take as big a punt on the risk side of things, so want to make sure that their pile of cash is a little bit bigger. But I would say you should be looking at what your break-even point is, and that ties back to your fixed overheads that you need to cover each month. And you might decide to say, well, I want to have 1 month's worth or 2 months worth or 3 months worth of cash sitting in an account to cover my fixed overheads if the shit was to hit the fan. So if you weren't able to sell anything, or if sales got absolutely annihilated for a short period of time like they did a month or so ago, then you've got sufficient cash there to be able to still to pay those fixed overheads like your insurance, your rent, your phone, your accountant, all that kind of stuff. But as I say, it varies from business to business. And, in a lot of businesses, it's something that takes a while to build up. So it's not something that you're going to get in a reasonably short period of time. I think it would take time to build up that balance. And really, it does come down to going and asking yourself honestly, well, what do I need to live off of? What does the business produce? And what do I need to take out of it to live a grateful but humble existence? And anything in excess of that, perhaps consider leaving in the business for the rainy day if the shit hits the fan account, so that when times like this do strike, you've got some reserves to tap into. And then obviously once you get over that reserve balance, so if you've got, if you call it 3 months worth of cash sitting there, and that amount of cash will vary from business to business as to whether it's $20,000 or $50,000, and some, it could be hundreds of thousands of dollars or even millions. At the end of the day, the principle is the same. And then once you get over that balance, well, then golly gee, I'm starting to get some excess cash. Now what do I do? So then you start looking at your overall strategy and going, with this excess cash, what do we do? And that's where you need to talk to your advisors.
Yeah, we've got a client who basically worked out that they wanted to have 3 months of their working capital. So basically, if they couldn't generate any revenue, what was it going to cost them to be able to run their business for 3 months without having any money coming in, or very, very little money coming in? And that's actually basically what ended up happening with COVID, right? So that builds up shit hit the fan account, and then that sits on the balance sheet, sits in your internet banking as a buffer, and then you draw on that to be able to pay your working capital. And obviously it gets depleted, but if you're going over a 5 to 10 year run where you're slowly building that up at 1 to 3% of monthly invoicing, then like Phil says, you're going to start with nothing, but when that day comes, you're going to have a lot more comfort. You're going to make better decisions. You're not going to be panicked, and you're going to probably be able to take advantage of opportunities that are coming at you, whereas other people are going, how do I stay afloat? Well, you've already figured that out earlier, so you've prepared for it, and that's what enables a business owner to be able to think at a different level with a lot more clarity than somebody that's in flight or fight mode.
Yeah, absolutely. And when you see the cash in the bank, it's pretty easy to think in the here and now, and satisfy the itch or the scratch on an immediate want or need, rather than actually sitting back and asking yourself, in 6 or 12 months' time, if something was to happen to the business by taking this cash out, what am I going to be stopped from being able to do? So thinking about and considering the opportunity cost of cash.
Yeah, we do want to pull up the balance sheet in Xero quickly, mate, and we can just talk about that briefly. But that's a lot of people during this time and during lockdown and whatnot have been talking about, businesses with strong balance sheets are in a better position to be able to survive a tough time like this. Well, the average person in the street that didn't go to accounting university like us for 4 years and then become a chartered accountant for another 4 to 6 is going, I don't even know what a balance sheet is, and how do I know if my one's bloody strong? So this is obviously what Phil's pulling up here is your balance sheet, and he'll talk us through very briefly what you're looking at there.
The old demo company balance sheet's always an interesting one, and it's like a bit of a lolly scramble. You don't know what you're going to get because Xero changes the data every month. So the demo company, from an overall working capital point of view, sitting on 20 odd $1,000 worth of cash there. By the time they take the cash available in the bank account as at the end of June of 11 plus the money that's owed to them of 9, and some liabilities here 7 to accounts payable and 1,000 to GST. So there's $8,000 that's owed there. Historical adjustments. So, I don't know what accountant they're using, but Xero needs to look at that. That's not right. Maybe Xero needs to get in touch with Next Advisory and they'll help them sort that out. That's a credit, so that might be income that needs to move to the P&L. Who knows? And a few assets here. They went on a shopping spree in May and bought themselves some office equipment. 3669. That's probably a MacBook Pro maybe, and some other Apple devices. Yeah, and run a bit of depreciation on that. Computer equipment here, or it looks like they've sold something and haven't finished off doing the disposal entries correctly. So Xero really do have issues with their accountant. I wonder if it's a chartered accountant that they're using. And again, I would suggest they need to get in touch with Next Advisory and would be able to sort them out for them. But from a demo company point of view, it's pretty hard to. It's not the greatest balance sheet to look at to go, gee, are they in a strong position? But the cash that they've got and the debtors available, they can pay their accounts payable and their GST and still have some cash left over. If they needed to, they'd be able to flog off the MacBook, for $1,500 on a fire sale and prop up the cash position. But really, there's nothing sitting in that savings account for a rainy day. They don't own any stock that they'd be able to then sell. There's no other fixed assets here. On the flip side, there's a very low debt profile, so there's no loans here. So the balance sheet isn't good, or at least they're solvent. That is a positive. You don't want to be insolvent when the shit hits the fan.
So if they'd been stacking up, say, 3% of their invoices, or even just 1%, where would that sit and they had a separate account?
It should sit under here, business savings account, and then you'd see the balance grow and grow and grow and grow over each month as you keep funneling cash into it.
Nice. And that's obviously going to give them a stronger balance sheet, isn't it? Because they've got a cash available to cover some of those expenses that live on our profit and loss statement.
Yeah, that's the one.
Thank you, sir.
Looks to me like they've got just a bit of a debtors problem. Balance is cranking up.
Well,
maybe they need to get some outsource their accounts receivable collection, or maybe they're not using the invoice reminder function in Xero.
They should be if they've been watching our content, and perhaps they need to get on the blower tomorrow and start chasing up some of those debtors. But I'll move the screen back to you and I, because I don't think there's anything else we need to go through on Xero there.
Was it back? Here we go.
Because that's all that we need to take a look at in there. But I guess in summary, what we encourage clients to do and what we'd encourage you to think about if you don't already is to have a separate account that you can funnel off your GST and your tax to, so that you're not tempted to spend that money. And then, of course, build a shit hits the fan account or a rainy day account to be able to prepare yourself for anything that might pop up, and so that you can still cover some of your expenses and think clearly as a business owner.
Yeah, and that really comes back to take out of the business only what you need, to leave some cash in there for if the shit hits the fan. And I think in these last few months that really has shown up for a lot of business owners to go, oh, gee, we're under the pump from a cash point of view. And they would have probably sat back reflecting, thinking, oh, gee, if I had done this or I hadn't done that, if I'd made this decision with my cash rather than that decision, I wouldn't be in the position that I'm in now. So, take what happened over those 6 or 8 weeks, however long it was, and get the lessons out of it, and make sure you implement them in your business so that they don't happen again.
Very, very good. And of course, keep it simple. It doesn't need to be complicated. I think a lot of people complicate cash in their business because they simply don't understand how it moves through their business. So little practical, simple things like just separating out your money via different bank accounts can go a long way to setting yourself apart from another business owner, or a business owner that isn't going to educate themselves about how to fundamentally understand money in a business, right?
Yep, absolutely. And all the stuff that we've spoken about this evening, we do ourselves. So as I said, we do have a separate account for our GST and tax. We do have a bank account with cash in it to cover working capital and stuff like that. So if something was to happen, we do have a cash reserve there. And then if there's a shit hits the fan, there's a little bit there, and then whatever's left after all of that, well, I transfer mine to offset my mortgage, and then we've got an AP off to the TAB for your share, I believe it is, mate.
I've been very quiet, during winter. I'm in my hibernation mode, but as spring turns, I might need to get you to refund of that somewhere else. Well, I think, like you said, it's something that we do ourselves, and it's great to be able to learn from other business owners, and I think more business owners need to start doing that, and we're big on that, and that is why you will see the ticker across the bottom there. Basically, we're running a planning day on the 21st of August where we will be having conversations with like-minded business owners that are going through challenges, and we're going to be in a room together solving them and figuring out, okay, what's everyone facing out there? What are they dealing with? How can we break down some of these barriers? And by the end of the day, you will leave with a challenge and opportunity sheet, which you will individually customize for your business and go away and work on those challenges and hopefully have the backing of some of the opportunities that you would have learned throughout the day. So if you'd like to come to that, the registration form is in the comments. Otherwise, get in touch with us and we can give you more information. Our podcast has been flying out the door as well.
Amped up and looking forward to that planning day. That first one was an absolute ripper. The feedback that we got from attendees was gold, and then seeing the attendees implement those things over the recent months. So we've had clients say that they wanted to launch an online Shopify platform. They were going to do it themselves. They decided to outsource it because of a timing issue. They've done that.
Wow.
Other clients that we've spoken to with, efficiency things, who understood, gee, I need to look at my efficiency, have now gone away and started to go, oh, gee, I need to look at it, understand it, and start to implement some systems and processes internally that are going to drive efficiency. So it's great to see that the attendees didn't turn up and left uneducated. They left empowered to make changes in their business for positive reasons. So we're looking forward to doing it again.
Yeah, I can't wait, mate. It's going to be a lot of fun, and it's something that drives up us is being able to actually help business owners get better at business. It's a lot of fun for us, and it's really, really rewarding. So 21st of August, again, for anybody that's interested, registrations in the comments there. Podcasts, if you want to listen to our podcast, it's been really well received. We've got about 15, 16 episodes there at the moment with plenty more to come. Search the What's Next podcast in Spotify or Apple Podcasts or wherever you listen to podcasts. And if you're not yet, well, YouTube had to listen to a podcast and go and find ours, and we can be the first one. But thank you, mate. Thank you for your help tonight. And I think there's plenty more topics to come. We're going to keep doing these demonstrations. They've been popular over the last little while. So if anyone has any topic suggestions or questions and you feel a bit shy about leaving them in the comments, lnp@nextadvisory.nz. We don't bite, and we will endeavour to respond to everybody that gets in touch with us across every platform.
And before we knock off for the evening shift, are there any questions or comments from the viewers?
Good question.
I did see Stephen has said, you guys are awesome. Our current accounts are Muppets.
We do hear that a bit, both sides of that.
Thanks,
we are
Stephen.
Awesome.
Appreciate the comment there.
Yeah. Well, we are taking on new clients at the moment as well, if you fit the right mold. So if you'd like to have a chat with Phil or I, then you can book into our calendars via our website and figure out if we're going to be a good fit to help you sort your accounting and your advisory and the growth of your business. We'd love to have a chat.
Absolutely.
Cool, mate. I'll let you carry on with your evening. That's been great. We'll get this online for people that did miss it. And I'm going to go and preview my GST period so far for a couple of little ventures I've got to make sure I'm keeping, I'm practicing what we're preaching.
Good man. You don't want to get stuck and have to get on the phone to IRD and say, hook us up with a payment plan.
Yeah, don't like ringing them. Not a good use of your time.
No way. Good
All
stuff,
right,
mate. Good to tune in and look forward to the next one.